From Devon Funds Management, Greg Smith, morning to you.
It's actually Generate, Mike.
My sincere apologies. I was just trying to work that one through. My apologies for that. Now, where are we? Kiwi trade data, what have we got? The deficit increased?
Yeah, that's right. It did to 1.2 billion for August from 716 billion in July. But let's look at some positives. On a rolling 12-month basis, the deficit has eased from 3.9 to 2.99 billion. It has softened in recent months, but if you look at it on a year ago, numbers still looking pretty good. So good exports are up 23%. To 5.9 billion. Dairy, horticulture is still driving the momentum. Fruit exports 57% higher to 905 million. Kiwi fruit exports, Mike, still going gangbusters, up 300 million on the same month a year ago to 772 million. And milk, powder, butter and cheese, that was up 272 million to 1.1 billion. So China up 343 million, Australia up 120 million in terms of exports, EU up 210, and even the good old US, despite all the tariff turmoil, that's up 96 million on a year ago. On the other side, good imports, they were down 30 million to 7.1 billion. So, yeah, weakening in recent months, but still good on a year ago. And I think you'd have to think, obviously, we saw those GDP numbers which you talked about last week, but yeah, we're going to get further cuts by the RBNZ, aren't we? And that's going to have an impact on the Kiwi dollar further, you would think. So, prospect of that deficit situation improving as our exports become cheaper to our trade partners and imports more expensive.
Talk to me about FedEx.
FedEx, yeah, a bit of a crack of a result in terms of the reaction on Friday. So the delivery giant beat at the top and bottom lines. Net income 820 million, up on 790 million. In the year ago period. What was more impressive, talking about traders, it was obviously a pretty tough environment for them, or it was certainly evolving. So they move around 17 million packages each day. They said tariff headwinds were 150 million in the quarter. That amount to some 1 billion this year, they reckon. The main thing, Mike, is this de minimis exemption. That used to mean that shipments under $800 didn't attract duties. They now do. That's pretty relevant to likes of Temu. That's increased costs, reduce the number of those shipments. FedEx also saw a few pressures in its business-to-business segment. But overall, quarterly revenues up 3%, 22.2 billion. International volumes, they fell by 3%, but the US, they went up 6%. So it seems like US consumers are continuing to gravitate more and more to online shopping. And FedEx are pretty upbeat about the full-year outlook. They see revenue of 4 to 6% growth. That was a lot more than the market expected. They're cutting back costs. They're reducing the number of pickup times, and that hasn't really been negative for customers as yet. They're actually increasing market share. So shares up 2% on Friday. They have been in the eye of the trade storm, and they've fallen around 18% this year. But I suppose management will be hoping for things settling down the trade front, I suppose, despite what Jerome Powell said last week, and that it's still an evolving situation.
All right, so it gave inflation, but the BOJ didn't move. No one thought they were going to move, did they?
That's right. So they held at 0.5%, 7.2 votes. So a couple voted for an increase to 0.75%. They've been actually trying to keep inflation going, and inflation actually eased to 2.7% in August from 3.1% in July. They're wary about the economic situation globally. Of course, they've got their own political uncertainty with their PM resigning, but they are open to hikes later in the year. But what was surprising, Mike, is that they revealed they're going to start selling their vast holdings of exchange-traded funds. So they're going to do so at a pace of about 620 billion yen per year. That's about $4.2 billion worth, but does sound like a lot, but they've got a lot, 75 trillion yen. So it's going to take them over a century to get through those at that pace. But look, they're committed to doing so. I mean, they actually became the largest holder of Japanese stocks around 2020, and they bought up lots of financial institutions during the various crises in the 2000s. So they've got a way to go. It's going to take a while, but just sort of really a signal of policy of normalisation. I suppose the other thing that sort of, even though they haven't been buying ETFs, the Japanese stock market's been hitting record highs. It's up around 15% this year. So the great unwind is starting, Mike, but they won't be doing it too fast, you would think, so as not to spook investors.
How about some numbers?
Yeah, how about some numbers? So the Dow was up 0.4% on Friday, 46,315. S&P 500 up 0.5%, 664. The Nasdaq up 0.7%, 22,631. FTSE down 1.1%. Nikkei, talking of that, down 0.6%, 45,045. ASX 200 up 0.3%, 8773. NZX 50, we had a good session, bounced back, up 0.9%, 13231. Gold up $41, 3685. Oil down 89 cents, 62.68. Currencies, the Kiwi weaker against the US, 58.6. We're under 89 against Aussie, Mike, 88.9, down 0.1%. British pound, 43.5. That was up a little bit. Down against the yen, down 0.4%, 86.7. This week, a little bit going on, but the earnings season settled down. UK and German manufacturing, US durable goods, second quarter GDP and US inflation. We've got results from Costco, locally, consumer confidence, and full year results from Kathmandu owner KMD Brands and Fonterra.
Go well, mate. Appreciate it very much. Greg Smith out of Generate Wealth and Kiwi Saver Specialists.